as well. So these are all stocks that are trending in the green at the moment. By the way, there's also perhaps a deal. Okay, we'll talk about that in a bit. First, the index, right? So 60 points lower on the Nifty, 240 points lower on the Sensex. It's gotten off to a slightly weak start, you'd have to say. The Bank Nifty is down about 200 odd points. In terms of the pressure pockets, it's IT this morning. TCS, Tech Mahindra, HCL Tech, Wipro are all in the red. Bajaj Finance is in the red as well. Coal India is down about 1.5%. Hero MotoCorp, SBI, Apollo Hospitals, all trending in the red right now. There's further pressure now in the market, almost inching towards a 100-point cut on the Nifty. The Bank Nifty is down almost 200 points. Just keep watching that. On the upside, there are stocks few and far between. So Dr. Reddy's is doing well. You have Divi's Labs, it's just about holding on the green line. NTPC, JSW Steel, L&T, a couple of other names that are holding on the green line. But otherwise, it is a weak opening. There's no two ways about that. The Nifty has now given up on the 19,300 mark with a lot of ease. And in the broader markets, okay, the mid-caps are outperforming as of now. There are a lot of stocks that are seeing huge losses, whether it's Orient Green Power, GMM Pfaudler, Manappuram Finance. So, it's a very sticky situation right now.
Well, that's right, Sonia. A few stocks that need to note, Yatharth. We had the management who just joined us and they were very, very optimistic about the average revenue per bed moving up to above 30,000 odd. They're saying occupancy is going to move to around 60% and margins as well will hold at around 27%. The street likes that. That stock's up close to around 10% as we speak. South Indian Bank, well, they have a new head out there, new head at the top, and that was announced late last night. So that stock's taken it positively. It's up close to around 5%. Kochi Shipyard, what do you say about that? As Prashant said earlier, not moving like a ship, like a rocket. Up close to around 4% yet again. SCI as well is up close to around 2%. On the flip side, a couple of stocks have come in for selling. GMM Pfaudler is down close to 6.5%. Volumes as well rather large out there. Orient Green Power, that's another one that's down close to around 7%. And Manappuram Finance is now down close to around 3%. I think we're waiting for a large trade to take place out there. I think only around 0.25% equity has changed hands, but we'll get you further clarity on that front. For the time being, the Nifty is holding around the lows that we saw earlier this week. We are holding at around 19,290 odd. Prashant, what else?
Well, the stock of the day is the company that we had just a while back with us, Yatharth, that is 8.5%. I think out of all the listed players, it perhaps is also, on the cheaper side as compared to, of course, the larger peers, etc. This is a 4-hospital company right now, looking for more acquisitions, as they told us. So 340 odd on Yatharth Hospital. Well, what else? You've got HBL Power, which is up 2.8% from the broader market. That is, so this part, the industrials part, has been doing very well. Stocks at about 265. Vivek was telling us about Phenolics Cables with the Jefferies note. Stocks up 5% this morning. So that's doing well. You've got Amber, which was up 5% yesterday. It's up another 5% this morning. So it's got decent volumes as well. 4.5 higher. Stocks at about 29.60. Sula, Sonia was talking about Sula, 3.5%, 505 on Sula this morning. We've got South Indian Bank, we just, I think, mentioned that. BF Utilities is another one. Cafe Coffee Day was up some 10-15% yesterday. It's up another 5% this morning. So that's, broadly the list of what's doing very well. You can look at things like Gokuldas Exports, etc., which is also looking up. TBZ, decent move for a long time. Not very much has happened in Tribhuvan Das Zaveri, but this week, stocks up about 25%. It's kind of woken up. So that is up on not bad volumes for right now. So more gainers in a bit. Market breadth is positive. I'm not sure if there is a block which has changed hands at GMM Pfaudler.
Yes, there is.
There seems to be,
13-14% block is what's changed.
So, if you remember, Nigel, I think there was this overhang, right?
Yeah.
GMM, there was a large block which was expected. I don't know if that is completely gotten done, but we'll try and have
0.8% equity has changed hands.
We'll wait. No, actually, on GMM Pfaudler, there's close to around 14% equity that's changed hands out there. And there's just one large entity that has 14%, which is Pfaudler. They have 14.5% odd. So we'll try to get you more details, but for the time being, that's the big headline out there. 14% equity changing hands, and there's just one large entity, that's Pfaudler, who's part of the promoter entity that has that.
This was the big overhang for GMM Pfaudler, and looks like it's kind of gotten done. So 1450 or so on the name. Manappuram is, of course, we highlighted. Garden Reach Shipbuilders, right? Another one which is seeing a little bit of pullback after the run that it's had, 2% lower. We've got Page Industries, which is starting with a 2.5% cut. Stocks down on volumes. Olectra, one of these bus manufacturers, which had seen sharp run up, up to the announcement from the government, 2.5% lower there. Coal India is down about 2%. HCL Tech, HDFC AMC, lots of names. T-Target is down about 2.5%. JBM Auto, another bus manufacturer, we had the company with us yesterday, that is down about 3% or so as well for now. So that's the sort of market picture. It's not bad. We're down about 60 points. So 19,300, very much on the index. Well, Shiv Puri is now joining us. He's founder and managing director at TVF Capital Advisors. And he's with us on the program. Shiv, great to have you with us here. Thank you very much. Appreciate your time here on CNBC-TV18. It's been a while, so welcome back. Just tell us, I mean, last we spoke, which is some time back, you were extremely bullish on the entire financial space, Shiv. That was the #1 holding for you by far. How have things changed? What have you been doing? How's the year been so far for you guys? And what's the view from here?
Well, I think compared to the last time we spoke, a few things have changed structurally first. One is that I feel this is a period we're entering, which is sort of the 2003-2004 era in terms of capital flows, which is going to likely to be more structural and I'm meaning talking about foreign capital flows. So we could have a period of the next few years with strong foreign capital flows and continued strong domestic capital flows, which would be a very interesting position for the market. I think the second thing is, from the last time we spoke, is balance sheets across corporate India are the best one would have seen probably in the last 20 years. And it's not just for corporate India, but even for all the financial institutions. Clearly, they're over-provisioned during COVID, expecting worse things to come. That hasn't happened. And so as a result, the ability for corporates to invest and for the banks to lend has never been better. And then finally, when you overlay valuations, which certainly in the larger names look reasonable, I think you still have a background of a healthy environment for equities going forward, barring any big global issues, which are always something of concern.
Sure. Shiv, hi, good morning, and thanks for joining us. It's been a while since we've, seen you here on the channel. So hope to see you here more often. In terms of individual pockets, right? I mean, it's become a little difficult to generate alpha in a market like this, where valuations are at a peak for many sectors. How are you looking at that, and where do you still see both growth as well as valuation headroom?
Well, I think as a sector as a whole, certain valuations are extended. But I think in some areas of, say financials, for example, when you're looking at perhaps even the largest private sector bank in the country, it doesn't seem that the valuations are that extended. And, if we're entering a period where the economy is going to grow at 6 to 7% real, you're going to have nominal growth in the double digits. There is still a very strong runway for credit growth in the country. And like I said earlier, asset quality remains good. Valuations are very reasonable, in line with the kind of growth that they're going to have. So I think there are pockets of opportunity like this. There are certain areas. The areas that I'm a bit more worried about are slightly on the mid-cap space. There are companies out there that have pretty extended valuations. Competitive pressures are building up. Capacity will come online. But I think in certain areas of financials, certain areas in healthcare, for example, certain large chains in hospitals, I think have a very strong structural opportunity over the next 5 years.
Hi, Shiv. Good morning. This is Nigel on this side. There are a lot of good domestic themes that are playing out there. How are you all focusing on it? Is it the real estate space? Is it infra, cement? I mean, what's your pick?
I think infrastructure and real estate and utilities has been an area that's always been a little difficult to navigate. And if you actually look at the wealth creation that's happened over the last 10 or 20 years, very few companies have delivered the kind of returns on a structural basis. I think on a cyclical basis, yeah, you're going to see some of these things move up, just given what's happening both in private capex as well as in infrastructure spending. You're seeing order books fill up. You're seeing, like I said earlier, capital availability. But I think there are still opportunities, predominantly in financial services and pockets of consumer, in some areas of healthcare, especially in hospitals, and then in certain IT names that are still have a structural tailwind behind them, but perhaps have a cyclically challenging period of the next few quarters.
So what would that mean when you say there's a structural tailwind and cyclically challenging period for the next couple of quarters in IT? Do you like them? Do you not like them? Because some of these stocks have, pulled back quite a bit. I mean, Tech Mahindra is up almost 10% from the lows in the last 1 month.
Yeah, they have. I think, cyclically what you're seeing is that there is a tightening of budgets in the US for spend. You're seeing projects get delayed. You're getting sales cycles elongate. But structurally, with the whole navigation of AI that pretty much all the big companies have to go through, you're going to rely on more customization. You're going to rely on more technology depth. And the Indian IT services companies are no longer just, passive partners in this process. They have actively helped all of these Fortune 500 companies navigate onto the cloud and are best positioned for the next level of migration that will come. But that will span out over the next few years, which means that there could be some really interesting opportunities come over the next few quarters.
Shiv, so let's just narrow it down, right? So top bets really for 15-20% kind of 15%. Let's be reasonable. Compounding stories from here, according to you. I mean, list out a few names if you can. That'll be lovely. Otherwise, the closest you can get.
Well, I think it'll be difficult for me to do that without compliance. But I would say that in terms of sectors, financial services still remains that way. And nothing has changed over the last couple of years. You've seen the best lenders continue to grow their loan book, earnings, and correspondingly stock prices. And so if you look at some of the largest private sector banks, some of the smartest lenders in consumer lending in the NBFCs, some of the home mortgages who run a sensible book, penetration levels are still so low. We've still got a very, very long runway over there. So I think...
Shiv, let me just come in there. Just a thought that I'm going to borrow from what you said just a while back. You said, well, with infra and real estate, you kind of said that over very long periods of time, there have been few winners, right? In that sense, I mean, not structural. You get these cyclical, very sharp moves. Can one say the same thing about banks? I mean, if you go back the last 20 years, have there been lots of, what's been the strike rate? I mean, if you take a bunch of banks, top banks, how many have structurally made money? I mean, you can count them on fingertips, say an HDFC Bank and maybe, so doesn't the same apply? I understand the fundamentals, but using what you just said about real estate and infra, go on.
Well, I was just going to say that the number of infrastructure and infrastructure-related companies has been humongous over the last 20 years. The number of private sector banks in India is a handful anyway. And of them, 4 or 5 have created immense wealth. There have been a couple that have had credit issues, but even some of them have bounced back. So I don't think we can really compare the two sectors because obviously banks, it's a regulated business. You have to have a license to be a bank. And there haven't been that many licenses that have come out.
Yeah. No, I was not comparing, and not at all. I mean, there's no comparison. I was just saying, you go fishing where the fish are, right? I mean, in that sense, just to use that phrase. So yeah, financial services, private banks, top of the list. What else? Number 2, number 3?
Well, I'd say that would be at the top of the list. I think the second area would be hospitals in India, especially those of scale. Mm-hmm. Because what we're starting to see is post-COVID, people are taking their health a lot more seriously. You're seeing life insurance patients, which used to be a very small proportion of our hospitals' incoming patient list is now rising quite dramatically. You're seeing people navigate and move towards branded hospitals. Earlier, they used to follow a doctor around. So we're seeing sort of some structural changes that are happening over there. And look, healthcare in India for the at the top private healthcare in India is still reasonably cheap compared to anywhere else, even in the emerging world. So I think there's also a lot of pricing that will come. Of course, the risk in hospitals is also always regulatory. But what we've seen post-COVID is actually a regulatory tailwind for some of these hospitals than rather a headwind.
Okay, all right. We'll leave it at that, Shiv. Thanks a lot for joining us. In fact, a lot of these hospital companies, even for, on the stock exchanges, have done exceptionally well. I mean, we just spoke to Yatharth Hospitals. They have very good, almost 40% revenue growth. The stock is up about 6%. So I take your point that, this is a space that is picking up quite
Just
well.
a bad joke I wanted to make, Sonia, a disclaimer. I mean, if you go to Shiv likes private banks and hospitals. If you go to a hospital, you need to go to a bank.
Hopefully
unless you have insurance, which is the third leg, which I think Shiv mentioned. Shiv, if you're hearing, thank you very much once again. Appreciate your time here on CNBC-TV18. Sorry.
I hope none of us have to ever go down that route, right? And all of us have insurance, I hope. Okay. But, PI Industries is the one that we're looking at. The company actually did not speak to us post their earnings, and it was a very strong performance this quarter, better than its peers. Revenues and profits witnessed a healthy growth. Exports have also witnessed a strong 33% growth. So we thought we'll invite the management to tell us a little more about the way forward. Mayank Singhal, the Vice Chairman and Managing Director at the company, joins in. But he's on the phone line with us. So Mayank, appreciate your time. Thanks a lot for joining in. I want to ask you a little bit about the domestic growth first before I head to exports, because there is a little bit of a problem there. Your revenues have fallen about 13%. And 20% of your business comes from the domestic market. So tell us a little bit about the pressure points here, and do you foresee more weakness?
Yeah, hi, morning everyone. So as you see, the company's overall grown 24% revenue for the first quarter. The domestic business has witnessed about a 13% degrowth. While I would say that the initial season delays and erratic rains have been the key driver, but we do assume to say that this catch-up can happen well in the second quarter. But on the other hand, the positive side is there's been a very high efficiency in the working capital, and PI as a strategy has taken not to really stock up the channels, but to more look at sales in the ground and accordingly optimize in the first quarter. So going forward, I believe that we should be in a better situation coming in the second quarter, and I think the sales would come in line to our expectations.
So when you say a better situation and come in line with your expectations, what are you talking about in terms of growth in the domestic business? Will it be a single-digit growth? Are you looking to get back to double-digit within this fiscal itself?
Yes, within this fiscal, we should definitely target a double-digit growth here.
Okay. Is there any, I mean, if the situation does not improve, Mayank, good morning.
Good morning.
Is there a possibility that at some point you've held on to what you said you will do for the year, but is there a possibility of you lowering, some of those estimates? I mean, your internal targets?
Well,
the way
I
things
would
are
say
looking.
that we're pretty much optimistic about looking at the way we see the order book position, the CSM, and the way we see the domestic business, as we have given an outlook of 18 to 20%, we would still hold on to that, yeah?
Okay. All right. So no real downside or anything of that sort out there. Could you tell us how much is pyrosaxophone as a percentage of sales? Sorry, that's a tongue twister for me. It's a product which has done well for this quarter. And what was the growth that you saw?
Well, I don't have the exact number for the product growth, but the sales are quarter to quarter is different from a product mix and demand cycle. So you could have a higher percentage of one product in one quarter and the other in the other quarter, and these are seasonal, as you know. So I don't have that in my hand right now, but yes, that there could be a higher proportion of that in this quarter.
All right. Hi, Mr. Singhal, and good to speak to you after a while. Nigel on this side. Well, 18 to 20% growth is what you're guiding for, but you've also indicated there is some pricing pressure. So what should margins look like?
Well, again, on the margins, we have looked at the pricing pressures, and we are looking at the targets that we have given. Obviously, we'll also be working aggressively on the cost fronts, which we are driving through. So we're pretty confident in maintaining the margins, as we mentioned, to where we are.
Around, so mid-20s?
Yes.
Okay. So overall, on the top line, you're saying it'll be an 18 to 20% growth. The domestic business, you're looking to get back to double digits in FY24. But for the export business, can you just give us a little more color on what the growth could look like over the next couple of years, and what could be the levers of growth?
Well, as we have a strong order book position in that business, we have certain new products which are getting commercialized, and we have given a guidance about the same level of 18 to 20% growth average for the next 2 to 3 years, and that's what we continue to maintain. Yeah.
And on the pharma business, there is an EBIT loss that you reported. What is the outlook? By when do you think the pharma business will start to see profits?
As you know, this was the first quarter, and this is the first quarter revenues and INDAS 118 accounting issues. So looking at that, we look at getting the revenue as we given a target around 500 to 550 crores at the year end, and that's where we are on target to that.
All right, Mr. Singhal, you had raised some money via the QIP route a couple of years ago, and then every time you've joined us and on various con calls, people have been asking, what are you going to do with this money? Now, you've done these couple of acquisitions, but you still have some money in the kitty. Are there more acquisitions on the anvil?
Sure, we're looking and evaluating various opportunities, but obviously they have to be in alignment and sync with our numbers and strategies that we have in place. So we are definitely looking at those opportunities in time.
And that would be in the pharma space itself?
No, we are looking at all the other business areas too. It's just not only in the pharma space. And also, as you would see, we have a capex outline. So, the QIP money was raised both for the purpose of capex and M&As. Yeah.
Okay. So, just to get back to the numbers, you said that you plan to double pharma revenues in the next 3 to 4 years. That is on track?
As you know, we just initiated. Yes, that's the initiative strategic plan. We are working towards that. And obviously, that's the idea there.
So what should the absolute number look like on pharma?
Well, I said the year-end number would be around 500 odd crores.
Okay, so 1,000 crores in 3 to 4 years.
Mm-hmm.
Okay,
As you know, we're in the building phase to differentiate ourselves in that space. So the initial phase is build out, and then obviously the revenues pick up. Yeah.
Sure. So 500 crores is what you're looking at by the end of the year, and perhaps doubling that. And in the margins, will it continue to be around 14-15%, or because you are in this building phase, would you have to take some hit on the pharma margins?
I would say the margins would be at the 14-15% in the first couple of years. We obviously, the intention and idea is to improve that with the strategies. As you rightly mentioned, in the beginning, we are making the investments, building the right teams so that we can have the scale up.
Are there any products going off patent globally which PI Industries can look at or even manufacture?
In the pharma space?
Yes.
Yeah, but in the pharma space, our objective is more in the CRO and the CDMO play, where we are working with innovators again and to create different jobs. So it's not really driven by the generic approach here.
Okay.
Mayank, just to get back to that one sort of molecule which has done very well for you, you said you don't have the exact numbers, but do you have a sense of whether we will see a repeat of that? Because you said it's done very well for you in the quarter gone by. Will it be maintained at that level? Because some analysts that we were speaking with were saying, well, that is unlikely because other alternatives to that, which are manufactured by China, etc., which had gone up in prices because of supply disruptions, etc., those things have kind of normalized now, and prices have come off for those things. So just wanted your input there.
No, that has been all, the numbers that we're planning has all been balanced with all those inputs with the global innovator and partners. To that extent, I can answer. Yeah.
Okay, so all of that included, 18 to 20% revenue growth is what you're expecting. Mayank, good to speak with you. Thank you very much for your time. Appreciate it very much here on CNBC-TV18. That's PI Industries with that insight. Well, 65 points on the Nifty, 19,298. So just about holding on to that level still. GMM Pfaudler is still your biggest volume-led loser. So it's down 6% after that large block. Manappuram, I think, has also seen a block. So stock's down about 5% or so on very large volumes. So about 146.6 or so on Manappuram coming through as well. TCS has joined the ranks of losers. So that is down about 1.25% or so at this stage. Market breadth is still positive, but the gap has narrowed quite a bit. 1120 stocks are higher and some 800 stocks are in the red. We'll take a break here. We will be joined on the other side by some power analysts, and we'll talk about the interest in the sector that we are seeing. We'll also, after that, connect with the management of Eveready India to discuss their first quarter numbers and outlook going forward. Stay tuned. Okay, welcome back. So things are down, but definitely not out with the 70-odd point cut on the index. Well, let's talk about the power sector, and there's a fair bit of interest coming through. The broad thesis for power sector's utility seems to be very simple. There has been no real big capacity build out, especially on the thermal side, for the last many years. Power demand is rising in a robust way as the economy is doing well. And, companies are now scrambling to either put up capacities or expand on the renewable side. New technologies like pumped hydro storage is also something which is being talked about quite a bit. Let's actually put some of these points to our experts who are joining in on the sector. We have Vikram V, Vice President and Sector Head Corporate Ratings at ICRA. We have Sumit Kishore, Executive Director, Capital Goods, Power and Infrastructure at Axis Capital, joining in as well. Gentlemen, good to have both of you here. Thank you very much. Sumit, is that the thesis I outlined? Would you concur with that? Very briefly, your thoughts, starting thoughts.
Yeah, good morning, Prashant. Thanks for having me on the show. I think India's peak electricity demand made a fresh record high of 233 gigawatt earlier this week. Average electricity exchange prices, as we speak, are hovering around 9 rupees on an average for the day. So basically, we see two peaks of power demand on a daily basis. There is a morning peak and an evening peak. The morning peak is met thanks to solar, but managing the evening peak is proving to be a fairly challenging demand, and it is likely to remain so for the next few years. So there is a growing realization in the sector that intermittent renewable installed capacity alone could cross or come close to India's peak demand in the next 3 to 4 years. And to manage this grid intermittency issues that this may trigger, given that we have a thermal heavy generation mix in India, there is a very big push for hybrid wind solar as well as renewable electricity storage solutions.
So that's where this pumped hydro storage comes in, right? Too often, right? And it's an old, well-established space. Of course, renewables is new in that sense. But talk to us about this opportunity, this pumped hydro storage. Explain to us what it means, what it does, and what is the excitement about?
Yeah, so basically pumped storage hydropower, or PSH, is a scalable battery storage solution, which is in focus now because it helps us to deal with the grid intermittency issues and basically the evening peak deficit dilemma that we are finding ourselves in. So basically, pumped storage hydro is a configuration of two water reservoirs at different elevations that can generate power as water moves from the upper reservoir to the lower reservoir, passing through a turbine. This is the battery's discharge phase. Pumped storage hydro also requires you to pump water back into the upper reservoir, and that is the recharging of the battery. To recharge it, you need basically green power, solar power, or wind power during off-peak hours, which can be used to sort of recharge the battery. And during peak hours, you can discharge the battery and benefit from this whole operation. Obviously, there is a 20% loss of overall power generation because it is inefficient to basically pump the water back into the upper reservoir. But that's still a more efficient battery cost-wise and longevity-wise as compared to, say, a lithium-ion battery energy storage solution.
So this will only come into play in the evenings when there is the issue, when the second peak, power peak.
Not really. Think about it like a giant water battery, which can provide you discharge for 7 to 8 hours in a day. So, you can use it during evening time for peak demand management. It can be used for ancillary, services. And, so it is a battery that can be used for a few hours in a day.
And how many companies are...
When the power prices are high.
Yeah, no, got it. And how much capacity in this space is coming up, Sumit? And is bulk of the new capacity being added here with this technology?
The PSH technology is almost 30-40% cheaper than prevailing prices in the battery energy storage system. India is targeting close to about 19 gigawatt of pumped storage hydro projects through 2032. but the potential in India is 100 gigawatt plus if we look at data from Ministry of Power. So far, Greenco has taken the lead in private sector. It's an unlisted company, but they are at advanced stage of setting up a 1.2 gigawatt pump storage hydro project in Pinnapuram in Karnataka. Within this, you have JSW Energy, which has ambition, and they have tied up almost 10 gigawatt of capacity in MOUs with almost 7 states. There is Tata Power, which is looking to set up 2.8 gigawatt of pump storage hydro in Maharashtra, where they have existing rain-fed water reservoirs. Even Torrent has an ambition. And plus the PSUs like NHPC, SJVN, NTPC all have allocations to set up pump storage hydro projects over the medium term.
Okay, so Tata Power, Torrent Power, and a whole host of others that you spoke about. Got that. This pump storage hydro plants is, I think, the next big thing. Vikram V of ICRA is also sitting by with us. Vikram, thanks for sitting by patiently. Of course, I want your thoughts on this, but in general, right, demand trends are also looking very strong. I was reading that in the last few days, the peak demand reached almost what 2,300 or rather 235 gigawatts. Tell me a little bit about that. What do you think the growth could be in terms of power demand, and also in terms of the discussion we were having, the pump storage hydro plants opportunity? How big is it?
Good morning, Sonia. Thanks for having me. Yes, the demand has grown very well in the current fiscal. Yesterday, I think the peak was 233 gigawatt. It's again the all-time high peak compared to 216 gigawatt that we saw last year. This financial year, in terms of the overall electricity demand, we expect a growth of 5 to 6%. April and May were a bit dull because of unseasonal rains, but demand has picked up thereafter in the months of June, July. In fact, August, we are seeing a double-digit growth in terms of the daily demand that we saw from POSOCO. Demand growth potential is there. And given that, just to put some numbers into context, currently the renewable energy contribution to the generation mix in India is about 23%. And this is including wind, solar, hydro, everything. And this is expected to go closer to 45% by the year 2032. So as my colleague rightly pointed out, as the share of wind and solar goes up, solar happens during the day and wind happens during the evening hours, you may not be able to balance the supply with the demand. In that context, you need these balancing sources, either battery storage or pumped hydro storage, and that's where the potential for these projects is coming up. And that's where the National Electricity Plan notified by the government talks about building a 74 gigawatt storage capacity by the year 2032 with a mix of pumped hydro and battery storage projects. The battery storage target is about 47 and pumped hydro is about 27 gigawatt under the National Electricity Plan. This could change depending on the economics, cost economics for these two technologies. But pumped hydro is a proven technology. We've had pumped hydro projects for a number of years in the country as well, but the quantum was very small at about 3.3 gigawatt, which was operational. But now the government is talking about a much larger number to mitigate the risk associated with this intermittent nature of the wind and solar power generation, and to ensure that the grid is balanced and we don't face these challenges going forward as the share of renewables goes up.
Sumit, so is this going to kick off another wave of investments and capital expenditure by utilities? And what does it mean? I mean, people are excited about this, although it's been around for some time, as Vikram also pointed out, because there is so much, tie-ups, etc., plans, etc., being put out here. Almost like a secret sauce for re-rating of some of these stocks in terms of the power utilities. How would you look at it from a stock perspective?
Yeah, Prashant, I'm very bullish on clean energy transition, as I've been sharing on your shows earlier. In fact, in terms of the top sectors where large investment announcements have been happening, the top 3 or 4 sectors include pumped storage, hydro, semiconductors. There is hybrid wind solar projects, as well as the value chain for manufacturing both solar equipment as well as wind equipment. So these are areas which are seeing growth in the companies around these value chains are likely to benefit. We have been mentioning that in the private IPP space, we see a medium to long-term growth opportunity in companies like JSW, Tata Power, and in the PSU space, we have been bullish on NTPC. And then there are companies, both listed, unlisted, in the whole value chain for solar equipment and wind equipment manufacturing.
All right, gentlemen, it was a pleasure speaking with both of you. Thanks a lot for joining in and giving us a comprehensive view on the power sector and all that's been happening so far. The other stock on our radar is Eveready India. The company's Q1 performance was muted, if you can call it that. There were higher ad spends that impacted their margins. The top line growth is also in single digit. Suvamoy Saha, who's the managing director at Eveready India, joins us now to talk about that. Mr. Saha, good morning and thanks a lot for joining in. You know, the overall top line growth came in at 8.3%. But if you look through the sectors, right, you have the lighting segment that did well, which was about a 20% growth. But the other two segments have seen a single-digit growth. So just trying to understand what is the outlook? Are you seeing any kind of caution in terms of demand? And on the back of this 8% growth that you did in Q1, where do you think you could end FY24 by?
Okay, thank you. Thank you very much and good morning. So, let me take you through the three categories and give you the growth perspective in each one of that. In batteries, which accounts for about 62% of our turnover, growth was at 6%. It was largely primarily due to price increases that we have taken in the beginning of this financial year. And we held on to our market share of 54%. The interesting thing in this category is that the tertiary showed a huge volume jump, which obviously did not come into the primary sale of the company at this point of time. So we are watching out. It is a very heartening and encouraging development. We are watching out for that, and we will see, how it goes in the second quarter and thereafter. Lighting is our growth driver. It accounts for about 22% of our turnover. In this category, we had, as you yourself mentioned, we had a growth of 20%. Given the backdrop of significant value degrowth in this market of about 10%, it was a very, very, I would say, pleasing performance. Flashlights, which is our third category, that grew by 5%. Flashlights, again, we had set a lot of hope on this category as a growth driver. The flashlight has a very strong seasonal connect with monsoon, and due to the delayed onset of monsoon this year, it sort of reflected in a lower level of growth than we had estimated. We hope to pick it up, as we go along. So for the overall year, we are still holding on to a growth estimate of a double-digit growth estimate, but that would happen more from the second half. The first half we recorded 8.3. The company is currently closing out on a huge transformative exercise that we had done in our route to market. So there are still some bits of gaps which are being addressed during this quarter. So we would perhaps continue at the same growth track as we recorded in the first quarter. From second half, we would, on a continuing basis, hope to jump back to a double-digit growth.
Okay, so you're saying that the growth estimates by FY24 end, you will do double-digit. Earlier you had said that the aspiration would be to double your revenues from FY22 to FY26. Now, in the end of FY22, you did 1,200 crores. So are you on track to do 2,400 crore revenues by the end of FY26? And if you can tell us, in the interim, what would the annual trajectory look like?
So, we would like to hold on to that. I mean, there would be, exact, whether 6 months before or after. But directionally, that is the way the company is progressing. And in order for us to achieve that, we need to record, growth at higher, teens, for it to happen. And we are today sort of, positioned to do that from the next financial year. Because, we have gone through this journey of, as I said, we went through a transformation exercise where we entirely changed our model of distribution. And the benefits of that would start flowing in the later part of this year and certainly from next year.
Okay, all right. Hi, Mr. Saha, good to see you. And, when we chatted the last time around, you were talking about growth in this year being better than last year, on the revenue front. So early teens is what we should assume, around 14%, 13-14% growth is doable. And also on the margin band, well, you have achieved that. You're doing already 12%. You had told me 10 to 12%. So do you stick by that, or is there an upside risk to the margins?
Okay. So I hold on to that estimate of 10 to 12% on the margin front. On the revenue growth, as I mentioned a little while back, we went through this journey on the distribution revamp, which has taken a little bit of, kind of time to fully settle down. But we are now on top of all that. So this quarter and the current quarter and the previous quarter, we saw slightly muted growth against the expectation or the estimate that we had set for ourselves. But I see that changing from the second half. So, I am not worried about these 2 quarters or for that total annual number. I would be more interested in seeing that, we go to that, closer to 12 to 13 or 14% growth in the second part of this year.
Got it. All right. Mr. Saha, just a couple of quick other questions. You're saying your aspiration is to double the revenues in the next few years. Is the aspiration that margins go to late teens? Point number 1. And point number 2, I see your interest cost per quarter has come down to sub 10 crores. So has there been some kind of debt repayment? And what do you end debt with for this year from 365 crores of last year?
So we would end somewhere close to 310 odd.
Okay.
By and large, that would be the number. The interest cost is coming down because of the repayments, and we have also been able to swap, higher cost debt with lower cost ones.
Okay, and the aspiration to go to late margins? Yeah.
Yeah, so we would certainly, guide for mid-teen level kind of EBITDA margin. And of course, it will be the effort of the company to improve upon that. But that is something that we can certainly guide for.
Mr. Saha, just a couple of more questions. There's been a huge amount of excitement around the company with the Burman family coming in, taking over. There has been talk about at some point, with your brand, with the distribution that you have, you entering new categories, etc. as well. Could you talk to us about whether something is firmed up there?
Okay. So, see, I have said this before. Our hands are really full for the next 12 to 18 months with our current categories, and there is enough growth to be unlocked from the 3 verticals that we have. But in order for us to come to that twice the turnover, we certainly would require a new category to come in. However, these are early days. The exercise is currently on to identify, what would be the best fit for the company. So we are currently doing, our drawing board, but actual implementation would take place maybe 12 to 18 months later.
So FY26, could be that year where you kind of firm up and execute that, right? But identifying which category, that is a work in progress, as you said. Thank you very much, Mr. Saha. Appreciate you joining in, and good speaking with you here on CNBC-TV18. Good conversation, as always. Well, we've got the market, which is down 100 points now. So it's a little worse off compared to even half an hour back. Mitesh is with us. Mitesh, quick thoughts on the price action so far and any fresh trades?
Prashant, the price action is negative, and as I said earlier, we are now possibly will try to test the 19,200 level. If that holds, should be okay, and market will bounce back from there. But otherwise, it will turn negative. And what is important today is that the Nifty IT has started to get into some kind of a negative zone. So either trade with some kind of cash stocks as your primary objective, or try to buy closer to about 19,250 to 30 zone with a stop below 19,180. With that, I have 2 stock calls, both from the cash side. Emerging CD, that's a buy with a stop at 138 for targets of 152. And the other one which I like is CG Power, which I would recommend buying with a stop at 414 for targets of around 440.
Okay, thanks a lot for that. Well, there's a new listing coming up now. There's a debut on the Lal Street for Concord Biotech. So this is going to be an interesting one because it's backed by Rakesh Jhunjhunwala's company. So, Rakesh Jhunjhunwala's company holds about 24% stake in Concord Biotech. And it is an Ahmedabad-based API and formulations manufacturer. So very interesting space there. Good opening, 22% higher now on Concord Biotech, 900 rupees on that stock. It has a very good market share as well. It has a market share of over 20% by volume across certain fermentation-based APIs And 50% of its sales comes from India, but 50% exports as well. And it's a high-margin business that Concord Biotech is sitting on. So good listing, a premium of 21.5% stake, and of course that added, USP of the company being backed by Rakesh Jhunjhunwala's company, which holds about 24.09%. But just remember, it's a pure OFS of a little over 2 crore shares for Helix Investments to exit their 20% stake entirely over there. Let's slip into a quick break on that note. On the other side, we'll put focus on the commodity space. Manisha Gupta will be joining in to give us more on that. Stay tuned. Welcome back, and let's get you a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's the one commodity that you're looking at today?
Sonia, I'm looking at the industrial agri commodity today, which is cotton used in textiles and a lot of export market as well. But that doesn't really seem to be working for it right now. We are looking at the prices trading at a 1-month lows. And for this week itself, we've seen prices decline by 3%. Flat trades, as you can see in the Indian markets as well, coming in there. It has to do with the strength in US dollar index, which is trading at around 2-month highs. We also have seen weak China economic data. And China is one of the major importers and users of cotton as well. And we have seen demand from there continue to decline on a month-on-month basis in June and July as well. And that really seems to be weighing on to the markets. More importantly, the major international associations and bodies have now come in with the global production and consumption numbers there. This one is from the US Department of Agriculture, which is expecting production at 114, but consumption much higher at almost 117 million bales there. There are similar cues also coming in from other agencies. International Cotton Advisory estimates that production is going to be lower at 112, and they're expecting consumption even lower at 109. The game changer clearly is going to be the demand from China, big bang stimulus measures, which the street continues to await all of July and now into August as well. And then you also have views coming in from Fitch, who's expecting higher production and an equal consumption as well. They expect the balance of the market to come back into this year, even if it comes by this quarter or the next as well. We also have views coming in from BMA, which also expect that you are looking at higher production this time around, and the consumption from them also is anticipated at 112 million barrels there, million bales there. So the street anticipates that the consumption will increase on the second half of the season here. Until then, the prices could very well be under pressure.
Okay, thanks a lot for that, Manisha. Well, let's talk about some buzzing stocks now. Yatharth Hospital is definitely the one which is surging at the moment post the management's conversation as well as the earnings. Sonal is here with the latest on that. Sonal.
Thank you so much for that. Well, yes, strong earnings coming in from the company, and it was an increase both on a quarter-on-quarter and on a YY basis. Revenues are up 39% on a YY basis. EBITDA has come in at 41 crore rupees versus 25 crores. Margins have expanded by 380 basis points, leading to a profit growth which has come in at 19 crores versus 10 crores. Quarter-on-quarter margins are flat. However, there is a revenue growth which has come by. Their bed occupancy was at 51%, which compares with 49% that they saw in quarter 4 and 40% in quarter 1 of FY23, that is same time last year. Their average revenue per operated bed increased to 28,140 rupees, which is higher both on a quarter-on-quarter and on a YY basis. In fact, we had a conversation with the management where they indicated that overall occupancy should increase from these levels and reach the 60% mark soon. Increase in occupancy will lead to organic growth and will lead to margin increase as well going forward. They expect long-term EBITDA margins to be anywhere between 26 to 27%, and they're also actually looking at acquisitions which they expect to do in the northern region of the country, and they will be using their IPO proceeds for acquisition, which will lead to further growth, and that's why the stock is higher in trade.
Okay, all right. Thanks very much, Sonal, for that. So that's the stock of the day, and we'll play our sound bites later as well. GMM Pfaudler, that block deal happened. Okay, I think that was Yatharth. I was surprised. GMM will come up on your screen, and I think it's still down. Vivek has got details on that block deal. Stocks recovered massively. I mean, it was down about 7-8%. It's down just 3% now. Vivek, take it away.
Well, absolutely. So today, in GMM Pfaudler, a very large block deal, 58 lakh shares, close to 13% of the equity, 12.9% of the total equity to be precise, actually changed hands. Now, if you look at the shareholding pattern, the only large entity that has such a large holding in the company, apart from the promoter group, is Pfaudler Inc. itself. So Pfaudler Inc. held 14.6% stake at the end of the June quarter. And also remember, in December 2022, Pfaudler Inc. divested close to 17.3% stake. So it's safe to assume that, it's most likely Pfaudler Inc. who's sold. Of course, it's important to wait for the disclosures that will come in, via the block deal and bulk deal data that the exchanges will put out. But it's safe to assume at this point of time, Pfaudler has made a complete exit. It was an overhang on the stock. It'll be interesting to see who the buyers are in today's very large block.
Okay, thanks a lot for that. We'll keep tracking that one, Vivek, and I'm sure you'll get us the latest on that as well. Let's step into a quick break. Motilal Oswal's annual Global Investor Conference kicks off starting Monday. On the other side, Lata will be in conversation with two stalwarts, Rajat Rajgaria, the MD and CEO, Equities, and Sachin Shahane, the head of sales institutional equities at Motilal Oswal Financial Services, for the Q1 FY24 earnings review.
Welcome back. In the just ended Q1 results season, Nifty EPS grew by 32% versus expectations of 25%, while EPS for the 231 companies tracked by Motilal Oswal, the EPS grew by 52% against expectations of 49. That's according to the MOFSL results wrap. That report says Nifty is trading at 8% below its long period average, and therefore the company is overweight on financials, consumption, automobiles. But more importantly, the company, MOFSL, is starting its annual Global Investor Conference on Monday. It runs for 4 days. And I have with me two of their stalwarts, Rajat Rajkaria and Sachin Sahani. Gentlemen, thank you very much for joining us.
Thank you.
Well,
Thank you for having us.
First up, Rajat, you are entering this conference on a high note. It's a great time to sell equities, right. Given this. Can you remember any other time? It looks like we had a 23% CAGR over the last 3 years and another 32% EPS growth now. I mean, this is a long period of good growth. It's coming after what, 2004?
Yeah, so this is the 19th year of the conference. So we started this in 2004. And if you remember, those first 5 years were probably one of the golden periods, both for the corporate and the markets. So 2004 to 2008, I remember every year markets making a big high, the conference scaling up newer heights. And I must say, Lata, in 19 years, we have seen all cycles of markets, right? But always good to host an event when not just the markets, but the overall sentiments, the economy, the political goodwill, and the approach of investors from all segments are at their high right now.
Okay.
So we are really
I will come to
forward.
that, especially the kinds of people who are now wanting to buy, because I think there is a sea change in that.
Yep.
But just a word on the report and the takeaways for the conference. Sachin, your report says that we are still at only about 18.5 times 1 year forward earnings. So you think that we have a good runway? Long period average itself should take us to what, 21,000?
So, Lata, I would say we will be in a consolidation phase for a while. Markets will take their own time to settle down because we have seen a strong run up in the last few months, obviously on back of very strong liquidity.
Yes.
So I think markets will take their own time to consolidate in this range for a while. And then, India is the market where earnings are very strong. And I think the forward earnings also look reasonably positive. We are factoring around 13 to 15% type of earnings growth even for FY25.
Okay.
So I think markets will move on further from here. And
but
in fact,
there is an intermediate period.
Yeah, intermediate period of consolidation, and possibly any correction would be an opportunity to add to one's position.
Okay. So Rajat, just a word on that. Before I come to FIIs and non-FII audience that you will be addressing, the global discount rate, which is the US yield, going to 4.5 or 4.3, will that be a bit of a dampener? Because that means the risk-free return is suddenly very high.
Yeah. So, Lata, many times over the last couple of years, we have seen every quarter either we're deciding that US is tightening or US is getting stable, right? I look at it that every time the talks of US tightening begins, we get a good opportunity to again build a portfolio, right? One thing is for sure that these interest rates are not going to come down in a hurry, right? Markets have their own wisdom to keep speculating at different points of time. But there is a very fundamental approach in the way the US rates are up or inflation is up versus India. I think in India, our regulators and our policymakers have handled things in a very balanced way. That's why our macro is far more stable. In US, I'm no expert, but I know that whoever I read over the course of last 8 quarters, every quarter I see views changing, right? So what Sachin mentioned about the markets consolidating, this is largely a function of the global markets. It's seeing some nervousness. But look at it, US itself is up high double digit this year despite all the concerns. So media headlines are one, But I think markets are right now not really being too much bothered.
No, that is a problem. The US growth is too strong.
Yeah.
That is one of their problems.
Absolutely.
But Rajat, the reason why I brought up this risk-free return is it really such a bother? Has your audience now shifted from being overly FII oriented to much more domestic oriented?
Well, Lata, this is something that I think we wrote for last 20 years, and finally good to see that playing out. Remember how we just used to track daily FII flows and used to predict the next day market opening, right? Today, last 5 years, the ownership of Indian markets has moved so much from offshore to domestic, and within domestic, it is not just the mutual funds or insurance, but also real retail and family offices and HNI.
Can you give us some numbers?
So, look, you see that today in the daily volumes, the FNO, which is a very large component, I think retail and HNIs are a much more dominant player than the offshore guys also. If you look at the domestic ownership of equities, right, every month by default you have almost $2 billion of SIP money which is coming in, right? And that's very stable. You plot the chart last 60 months, every month that number is moving up. You have pension money, and plus I think a very important change that we are seeing is people are becoming far more open to taking some risk on their savings in form of equity, because compounding has helped them earn at least 15% post-tax return versus a fixed income which has made them probably 4 to 5% post-tax. So the difference is big over a period of time.
Okay.
Just to add to what Rajat mentioned, even in our conference, the interest which we are seeing from family office, HNIs, that is massive, compared to what it was over the last 2 years.
They are surpassing the number of foreign investors.
Yeah, I would say not in terms of absolute values, but in terms of the interest levels and their participation. They are definitely inching very, very close to institutional, and you see their participation in most of the blocks and other transactions.
Yeah, but in the context, as you pointed out, private equity is a big category. Sachin, they're also selling a lot. They're using this rally to step off. Your thoughts on that?
Yeah, so obviously, what they invested a decade back, or maybe even earlier, obviously they would want to take some money off. Maybe some mandates may be running out of their time.
Is that giving you a sense that maybe we are at least near-term highs?
But there are so many private equity funds who are raising more money. In fact, today only I read this ex-CEO of Reckitt Benckiser. He has raised a $100 million consumer fund. So he's planning. So I'm saying that there is still a lot of interest in fresh money coming in. So there is always, and capital chases returns. And I think India is a market where returns are the best versus so many other emerging markets.
Oh, absolutely. Okay, now I want to know from you all, what themes are you all trying to explore in the conference? Rajat, you first.
Yeah, so Lata, there are 3 key themes that I think investors want to play. The first, this financial sector has been like the backbone of Indian equities for the last 2 decades. And the best thing right now is that financial sector is very well diversified, not just at lenders, but also non-lenders. You have insurance, AMCs, many other forms, right? I think this space will continue to get larger and larger, and companies who are able to execute well. There will be fewer players, but very large size players. What you have seen in banks, where you have 5 big private sector banks and 5 PSUs, you are going to see that same norm in every segment of financial sector. That is one. And I think here winners are obvious. You just need to be patient to compound your returns with them. So that is one theme. I think the second theme is manufacturing. After a decade of last decade where we essentially saw consumption coming up, right now manufacturing is coming in at a little slow pace, but at a very definitive pace, right? You have seen segments right from a defense to a railways to a PLI coming up. I think come elections 2024, once this event is behind, you will see a lot more investment scaling up. This is one theme which can really make markets very interesting in the subsequent 5 to 10 years. And I think the third important thing will remain consumption, because this country as the per capita GDP keeps growing at a rate of 10-12%, every year you see more and more people becoming eligible for higher and higher consumption pattern. So these three themes are the central themes, and within that you pick up, what is attractive, what is scalable, but essentially the conference focuses on these three themes.
Okay. Sachin, you want to add in terms of companies, in terms of speakers, themes, panels?
No, so just what Rajat mentioned, the interest on companies, so within manufacturing, the EMS space, despite the run-up which we have seen, we are seeing huge interest.
EMS is still a very big bet for you.
Absolutely. So EMS is a very big bet even now. And also we are seeing very strong interest in consumption, especially discretionary as well as staples.
What about e-commerce?
Yeah. So another, we saw, some bit of good amount of valuation corrections in those names. So now we are seeing a very good interest in those names as well. So in fact, Lata, we have still some unmet demand on meetings, despite having a 3-day conference. It's amazing that we are still not able to allocate a lot of meetings to investors.
Okay, that is the level of interest.
That is the level of interest.
Okay, which is the sector or category where investors are asking for meetings? I mean, sectorally. So
as I just mentioned, it is all about consumption, discretionary as well as staples. It is about manufacturing, the EMS space, as well as in durables, and also in autos and banking.
Okay, all right. So that's where you're overweight, right? You're overweight financials, consumption, and automobiles. What about betting on IT? I mean, after a serious downturn, it's kind of back in the fashion, at least as a trading bet. Is not that a theme at all?
So, IT is generally a theme which compounds maybe at a rate of 15% over a period of time. But sometimes it overdo on the up and sometimes on the down, right? Okay. I think in the last 3 years, you saw sector multiples getting meaningfully re-rated. Yes. And last 12 months, you have seen as the US slowdown has crept in, the stocks have come off. But again, here you have seen large caps taking the more beating than the mid caps. Many of the mid cap ITs, which are still executing well, are almost at their highs. I somehow feel that many of these large cap ITs, price-wise, valuation-wise, are maybe in the right zone. Timing-wise, maybe a couple of quarters, because till the time you see adverse news flows coming out of US, people will just be little hesitant to build. But I think sometime towards the end of this year, my bet would be that people will start building in IT again, because it's still a sector in a downturn which still grows. The earnings don't contract.
Absolutely.
And plus the balance sheets and the dividend yields are the best that you can see in this space.
Okay. Finally, PSUs are really back in fashion with railways and defense.
Yeah.
Is that also a significant theme you all will explore?
Yeah, it will be, I would say, selective interest, because, a lot of clients buy some by mandate and some have seen a bit of already a run up on PSUs. But still, some PSUs are definitely attractive. We have seen massive interest in utility space. So power and utility sector is something where government is also working on a lot of reforms. So we do see selective interest in that space as well.
Selective interest, though at the moment you all are underweight on energy and utilities, according to Gautam's report. Finally, the last word you want to say about your conference.
So, this is the 19th year, right? Whenever we see the responses from both corporates and investors, we always feel delighted. The one big remarkable change we have seen in the last 19 years is the diversity of investors and the companies that we see at the event. This makes this market a very structural long-term story, right? There is no concentration of either earnings on the corporate space or investments on the investor base, right? I think given that our sizes in the global economy and market cap ranks are scaling up every second, third year, right? We believe that we are entering a phase where both domestic and offshore money allocation to India will keep rising, right? And as we move forward onto the conferences, right, I think the size itself will attract more and more investors and larger companies.
I think you put the themes very well on the table. I can't even wrap that up. It's so well said. All the very best for your conference.
Thank you.
Thank you.
Well, that's a wrap on the Motilal Oswal conference curtain raiser, and we will get you as excerpts and experts from that conference starting Monday. For the moment, wrap up on Bazaar Chartbusters coming up.